So yeah, we're definitely going to talk some finance and accounting as it relates to the marijuana industry. Sorry for such late in the day to hit these kind of topics. You know, when you talk to the accountant and you're talking numbers, you put me in accounting systems, you put me in spreadsheets, I can live there all day. So this will be interesting as far as how well I can educate and let you know all the things we're seeing in the space today. So when I think about, we're going to talk about the accounting first. When I think about the accounting considerations, I think about it in four different kind of buckets. We think about the type of entity, the banking considerations, the accounting systems, and then the last and probably the most important is the unique accounting items surrounding this industry. So with the first one, when we talk about type of entity, you've heard earlier from lawyers advising on different structures. And it's very, very important when you're starting your business that you go through these considerations with your tax accountant and your lawyer to set it up properly, to understand what types of structures are out there. When we look at the space right now, we see a lot of limited liability companies, and they're treated as partnerships. And why that's important to understand is when you're dealing with partnerships, you need to understand that that tax implication then flows through to the individuals. It's not the entity itself being taxed. When you're dealing with corporations, it's being taxed at that corporate level. We'll get into a bit of that today as far as talking about those tax implications, because in this industry, more than any other that I'm operating in right now, it is so important to understand the tax implications associated with it. You know, this industry has significantly changed. Just, you know, a year ago, 2 years ago, a lot of the dispensaries that we were working with, they operated as not-for-profits, and not-for-profits have their own accounting. But now with the state going rec, we actually are finding the dispensaries are choosing to be for-profit, which again is a type of entity structure, and it's truly needing to understand the implications when you're creating that structure. We're going to hit it a bit too in the finance section because it has implications all the way through. It's understanding when you start your business, kind of even where you're going in the next 3 to 5 years, who you're looking to be your owners, your investors, and what structure makes the most sense based on that. So again, legal entity. While accountants aren't necessarily as part of the creation of that, it's going to be one of the first questions they're going to ask because it helps set up everything else. So after the type of entities, we're going to talk about banking. Banking is so unique in this industry. You know, I started this about 3 years ago. Completely different than what the industry is seeing this year, and I'm going to take bets it's going to be completely different than what we're going to see next year. We have the Safe Banking Act that passed the House, looking for it to pass the Senate, which then will allow a lot more banking options for the marijuana industry. But until that's happening, what is occurring is because banks are federally insured, they're not dealing with the companies in this industry right now. And so you are finding, and I've put a few in the slides, here in Arizona, there are a few banks that are working in this space. And I would just caution you, it isn't like going in and getting a checking account or savings account and setting up for any other industry. Don't expect it's going to be a quick process. These banks are set up and they're based on your licenses. And when it was probably a year or two ago, but it was taking 6 months to 9 months sometimes because of the number of companies trying to get in these banks and the process to get these accounts set up. It really was time consuming. As part of them also having kind of, let's call it the niche, in working with the marijuana industry, they're charging higher fees. You know, it's not, oh, here's free checking and all of that. So expect higher fees associated with it. Expect reporting requirements, generally monthly reporting requirements associated with it. And also rigorous reporting with that bank. It's tied to the license itself, so you will see all of that. Now, I can say it's gotten a lot easier to do banking in the last year, year and a half because of these banks moving into the space. What you still won't find is credit cards. You know, your American Express, your Visa, your MasterCard, they're not jumping into the arena here yet in the marijuana industry. And it's generally not an option that you're going to be dealing with. So you'll be dealing with a lot of cash and the banks associated with that. So we've talked about legal entities, and we've talked about banking options. And banking options we're going to continue to talk about because I'm going to say, as an accountant in the space, we deal with cash, 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 cash. I can't say it enough, and I'm going to say it a few times tonight. But what you don't realize when you get into this space is you need to put so many controls and processes in around your cash handling. You know, I've been amazed. I can sit there with an accounting team and they can look at the colors of the bands on the bills and the size of the bags, and they can tell you or roughly estimate how much is in the bags. I mean, it is an industry like no other industry. And with it comes the cash counting equipment and the number of touches when you're dealing with putting in your processes and procedures to make sure you're doing your counts. You bring it in, you put it in your safes, you're doing your counts. If it's going out the door, you're doing your counts. You've got safes. You've got to invest in safes on site in order to you know, keep the money until whether you're dealing with one of the bank's requirements where you've got armor card service picking it up. So you've got safes. You got to think about the security procedures around the cash, around the safes, but around your people that are dealing with it. Not only security systems monitoring the cash handling, but also knowing that anybody outside of your dispensary knows it's a very cash intensive business. You've got to look at security procedures associated with it. What else on cash? The other thing on cash is IRS Form 8300. They're monitoring for cash deposits, withdrawals also, but we're going to talk about deposits of 10,000 or more. And so these are essentially flagged, and there's forms that have to go with when you're doing deposits 10,000 or more. So what do people try to do? They try to do smaller increments and more of them. I would strongly advise just stay in compliance, do the paperwork, and keep it above board, because you will also get flagged if you're doing these smaller deposits to avoid some of your reporting requirements. So cash, 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 banking. Oh, now we've got our legal entity set up, our banking set up. Now you're going to be dealing with your accounting systems. So with a lot of the businesses in the industry right now, especially on the dispensary side, these are very small businesses. They don't need complex accounting systems. And so you will find that the majority will use an Intuit product, whether it's QuickBooks Online or QuickBooks Desktop, excuse me. It handles pretty much everything you need as far as the debits and credits and, you know, the safeguarding of assets and being able to produce audit quality financial statements. When you do get into the larger kind of companies here in the space, you know, Sage has a product out there, X3, that was designed for manufacturing, cultivation, and all of that, and it's got bells and whistles, and it's going to take a very long time to set up. But for the most part on dispensaries, we see a lot of the QuickBooks Online being used. Now, will that accounting system handle all of your needs? No. You're going to have an add-on just like any other industry, because you're going to have a lot more reporting requirements, compliance issues, inventory, daily tracking, those type of things. And so I've put up on this slide some of the more common applications that are out there that are currently being used in the system. We're going to talk a little later as far as all the new kind of apps and companies coming in on these platforms in the space, because they see what we see. We see that this industry is just getting ready to absolutely take off, and companies coming in right now and getting things set up are going to be better prepared for what's coming next. And so you'll see even a lot of the investments and companies in the space that are raising capital right now are in your third-party applications, whether it's the e-com platform or the inventory tracking and compliance, or you've got distribution mechanisms and all of that. There's so much going on in that space. But like I said, QuickBooks, you know, people laugh a lot when I say QuickBooks Online. Intuit has put a lot of money into their systems over the last few years, and it does pretty much everything that your accountants will need when you then add on another product for your inventory tracking. So what's next? We've talked about our banking, we've talked about our legal entity, we've talked about the accounting system, and now we're all set up. Where the majority of our conversation is going to be with the marijuana industry is what we'll call our unique accounting items. So when you talk to a C.P.A. and they can talk, you know, GAAP or the IRS code or, you know, debits and credits, there are some things so unique within the marijuana industry that it really is the best place to focus when you are hiring your accounting professionals, to understand if they understand what's so unique in order to be tracking. Because honestly, if you're going to get caught up on something, it's going to be within this next topic. So the first question that I hear a lot, you know, what is this 280E and, you know, what implications does it have? So marijuana is a Schedule I controlled substance. It's considered in the business of trafficking, right? And so until it's no longer a Schedule I, which is illegal at the federal level, there is an IRS code, it's 280E, that applies to Schedule I controlled substances. And 280E, as simply as I can say it, means it is more costly to be in the marijuana industry on a tax basis than pretty much any other industry. That's very simply said. But what 280E is saying is, yes, federally, it's illegal to operate your business, but that doesn't mean you don't have to pay taxes, and we're going to tax you different than any other industry. And so what 280E says is essentially, from your revenue, the only deductions that we're going to allow you to take are those directly associated with your cost of goods. So the cost of goods meaning the cost to purchase your inventory and the cost to get it to its intended distribution. Anything else, your overhead, your general, your selling, all of that, your people, your rent, your space, all of your stuff isn't allowed. And so you're taxed at a different level, and the majority of your operating expenses are excluded in that tax basis. So then once people understand what 280E is, what's their next question? Well, the next question we hear all the time, can I create several entities to avoid the 280E? Many have tried, some succeeded, some painfully have not, is the easy answer. Again, to operate in this space, it is very, very costly. There was a case that went through the courts in 2018. It was associated with Wellness Management Group. And what they did is you see a lot of companies creating management companies, in order to create the separate entity, say they're going to hire the people, pay the vendors, but they aren't actually selling the marijuana products. So this management company took the position, because they weren't actually selling, that 280E didn't apply to them. Well, the tax court found that not to be the case. Basically, they were trying to circumvent the 280E by creating these separate entities, and found that they needed to file under 280E, and basically came back with a very large tax bill. And what made it even worse is if companies act like 280E doesn't apply to them, and they don't keep good records on even what is considered deductible under 280E, when the IRS finally comes knocking, it's very hard to go back and put those records in place and even qualify for the deductions had you been doing it from the start. So my best advice is going to be, act like 280E applies to you, and then consult a tax lawyer in order to see if there is a position that you can take to say it doesn't. But act like it does. Make sure you keep your records in place until, and we're all looking forward to this, until 280E is obsolete and no longer are we being held to different standards on our tax returns than any other industry. So the visual that I put in place in order to clearly show you what we're talking about when we're talking about 280E is, if you look at an income statement, you go from your revenue to your cost of sales to your gross profit, right? And then you've got your overhead expenses associated with the business, and then get down to that line item, income before taxes. Well, the income before taxes is where any other industry, and where an accountant would generally, and I don't know how many times I've even, when working with banks or other accountants coming into this industry, the number of times that we walk through how to look at the impact and how shocking it is when you do. The income before taxes in any other tax return is the line item that you then apply your tax rate to, right? So in the state, we're here in Arizona, it's 4.9%. We're going to tax at that line item. And if we weren't dealing in a controlled substance that was illegal at the federal level, that would also be the line item we would apply our federal tax rate to. So again, remember the initial conversation we had in legal entities and why it's important. So if we are creating a C Corp, currently the tax rate for a C Corp is 21%, right? If Biden passes his current tax legislation through, it'll be 28%. If you're personal and you're running this through as a partnership and it goes through your personal returns, it could be up to 37%. So just think about that. While the state is down below that 4.9% on income before taxes, the tax rate that's either 21% or up to 37% is up there on your gross profit line item. So you're not getting any of the other deductions below that line item when applying 280E. So what looks like maybe, let's call it a 26%, 25%, 26% effective tax rate if you were in any other industry, the same math when you have to calculate your tax on gross profit could be 85, 86%. That's twice the tax rate. So I know I've said it before, I'm going to say it again. It's costly to be in the marijuana industry, and you need to understand the implications of 280E until it goes away. So we've talked about 280E, which is where most of the questions come in, but there's other considerations that we talk about in regard to accounting. So not only are we dealing with, 2 years ago, if you tried setting up a bank account and you didn't necessarily tell them what industry you were working in, as soon as you tried cashing, a check or sending a check to a vendor that had a name that flagged with the industry, you would generally get a letter in about 30 days from that bank going, okay, we're closing you down, cease, outgoing, ingoing, and it's closing down. Well, the same thing is happening with your employees as far as, when you're depositing their paychecks. And so a lot of them, again, you don't necessarily want being tagged with the marijuana industry. So we see a lot of companies using PEOs, which are professional employer organizations. Now, PEOs are nothing new, but I'm finding in all the different industries that I work in, I'm definitely seeing them utilized more in the marijuana industry than any other industry. And for the reason, these PEOs are set up where they essentially are acting like the employer. And so they're hiring and they're paying and they're processing payroll on your behalf under their EIN or identification number. So your employees then are receiving their paychecks and their W-2s on a completely separate business name that isn't necessarily tied to the dispensary or the marijuana industry. And so PEOs have become very popular in this space for that reason. Now again, going to be obsolete in a year or two, but still things to think about as we go through it. Cash, 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 cash. We talk about cash all the time. It is just so, you just don't understand it until you see it. Many CPAs, many accountants will never deal with cash. I've got 2 boys. They don't deal with cash, they don't, coins, it's just a foreign concept. And you go back into this space and it is shocking how much you're touching cash and the time spent with it. And so if you've worked in a different industry or had an entity in a different industry and you think, oh, my accounting team, I had 3 accountants and they handled all of these things. When you go into this space right now, I would say do not be surprised when that accounting team has to grow because of the number of touches that you've got with the cash. When I think about how much is spent in a normal industry dealing with reconciliations and paying vendors and collecting from customers, I would say roughly, let's say 20% of accountants' time is dealing with that. In the marijuana industry, I would say it's closer to 60%. Now, will that go away in 2 years when, the Safe Banking Act passes, we become federally legal? Yeah, but right now, I can't stress enough the amount of controls and the amount of touches and the amount of time. And finding people that you're comfortable with these type of assets, right? They're not checks. They're really needing to be safeguarded around these assets. So cash, cash, cash. Cash is king. Cash is going to take a lot of time. You also are dealing with a space. You need to look at creditworthiness of customers. A lot of your dispensaries, you're going to be dealing with point of sale, right? Cash considerations, not really a big issue. But as you continue to grow, you are looking at those types of things. Another consideration, which we hit on with 280E, is understanding what's acceptable in your cost of goods sold. Like I touched on earlier, like your rent, your people, your sales team, the people on the floor, all of that space, the storage, utilities, all of that does not fall into, for a dispensary, cost of goods sold. So while you need to be very, very cognizant of what you can claim and definitely do claim, again, you just need a really solid accounting team to be tracking and making sure that you are comfortable in anything that you are claiming within your cost of goods sold. The other thing that we're not seeing as much right now is, I mentioned earlier, dispensaries first, when it was just for medicinal purposes, were required to be not-for-profits here in Arizona. And with that, they had to be audited by a certified public accountant on an annual basis. Now that just changed about a year and a half ago, and that audit requirement is now every 2 years. But it was something in place, and it was something that was necessary for the renewal of the licenses. And so not as much so, but I would say as long as you are always practicing as if you're going to be audited, the audit should be easy. So we've talked about the accounting implications around the marijuana industry, but you've got the same issues that other industries have, right? You're going to have to make sure that you are keeping all of your documentation. The IRS will tell you anything 75 and above as far as spend. Keep your receipts, make sure it's documented, make sure it qualifies. You've got your annual 1099 that you need to do, whether it's the miscellaneous or the NECs. So for anyone you're paying $600 or more, you need to make sure that you've got all of that there. Another thing is, in Arizona, we call it TPT, or Transaction Privilege Tax. That's just Arizona's name for sales taxes. So sales taxes and the compliance and the reporting for that on a monthly basis. There's just so many things that your accounting team is going to be supporting you with to make sure that you're in compliance and comfortable, especially in this state. I've heard statistics that within this space, at least 10 to 15% go through an IRS audit. So the marijuana industry is definitely on their radar. Maybe because of 280E, maybe because of companies trying to circumvent, but definitely because of its status. They even, I think it was back in 2015, 2016, because of that audit requirement for not-for-profits, and it was required that you had to have a certified public accountant do that audit. You still find even today, some accountants are very kind of wary of the industry and what it means to their license. And so the Arizona State Board of Accountancy actually issued something, a provision back in, I want to say it was 2016. And it went so far to call out the marijuana industry and say, because of this audit requirement, that they would not consider it, quote unquote, an act discreditable to your license just by accepting these types of engagements. So you still are only dealing with a certain population that has come into this space in order to handle your needs. But as we've walked through this afternoon, there are so many things that are unique, not only to this space, but then just making sure you're compliant on all your other stuff, that you are going to want to make sure that when you're setting up your accounting team, that you are finding qualified individuals, not necessarily ones coming in for the first time and learning as they go. So as a final thought in regard to accounting, before we get into the finance side, accountants will say we're very much debits and credits, not necessarily, wordsmiths sitting here doing presentations, but we love our numbers and we love the fact that things have to equal out at the end of the day. But I can't stress enough all the different ways that things can go sideways in this industry, and so many things that are different in the accounting arena as it relates to the marijuana industry. So act like you're 280 compliant and get the right support behind you is my best advice. So with that, now we get the fun stuff. So accounting is the foundation. Accounting is the foundation for your tax accountants. Accounting is the foundation for your finance side. As you're getting into this industry and this space that has so much going on, that is so different than even it was a year ago, and I'm going to bet is going to be so different even in the next year. When you're starting up a business, just like any other industry, you think about it in three kind of different sections. You think about who your investors that you're looking in order to come in and what they're going to want. You're going to be thinking about how you get them comfortable, what you're going to be providing them, not only upfront, but ongoing. And so finance is definitely the fun piece of the accounting. So we stop talking about historical and we use those numbers and that information, and we start talking about what ifs, what's coming, what's going to happen, and the assumptions behind it and what we're going to deliver. This space right now is so much fun for an accountant like myself. It really is different than anything else we're seeing. There's so much happening, right? With the change that happened politically in this last year, with RET going in this state this year, and us taking the bet, what is 2022 and 2023 going to look like? When are some of these conversations that we're having right now going to be obsolete? When are we going to be treated like every other industry? Well, what makes it fun is you've got all those questions right now, and all those questions are what is bringing in the opportunities and all of the activity that we're currently seeing right now. You know, I've been watching kind of the investor finance side and all of these startups coming in, whether it's the e-commerce platforms, the distribution channels, right? Right now, you can't go across state lines. And so historically, a lot of the entities have been set up as, we call them multi-state operators, or MSOs. And they had to have that footprint in every state in order to be able to sell in those states. Well, with everything that we think is coming now, you see the focus where they're going kind of away from the MSOs, and they're more thinking, what are the best states to have the footprint in? And Arizona is definitely a good state to have that footprint in. But how, when the states open up, how are they going to get their products all over the place? What is the e-com platforms going to look like? What are the distribution channels going to look like? And because of all those questions and all of that stuff that we're watching right now, there is so much activity in this space, so many kind of M&A plays where, you know, to be the ones that understand your numbers, to be the ones that have solid accounting historically, or, you know, the projections and the pitch deck going forward, those that are going to be better prepared are those that are going to be ready for what's coming. So to be ready for what's coming, what would I say should you focus on? Well, as we talked about with legal entities from the start, it's one question to start asking yourself as you're doing this. When you're looking for, if you're looking for investment funds, what type of investors are you looking for? How do you want to provide equity? Those are great questions to be answering as you're setting up your legal entities. But when you're looking at them, they're essentially going to ask you three questions. They're going to say, what are your revenue projections? What is your total addressable market looking like for whatever it is that you're going after? And how are you going to use our money? Those are just 3 basic questions. And so how do you get them there? Well, standard would be if you at least go through, have your income statement. You're looking at 3 to 5 years. A lot will say 5 years. I don't know, 5 years is very useful because, you know, as anyone that does a budget, as soon as you set a budget, it's stale. But generally a 3-year outlook, 5-year if you can do it. It's more of a run rate, more of a guess, especially in this industry where as you go outside of your current state and you're dealing with pricing compressions and all the fun things that a finance professional gets to think about, you're setting those projections and you're using your assumptions, you're documenting your assumptions and your balance sheet and your statement of cash flows. But more importantly, it's documenting the assumptions that all of that is based upon, right? If you're thinking you're going to go outside, if you're thinking you're going to expand, if you're going to get out of just a dispensary and go into a grow, so many things to think about. And so it really is starting with that foundation of creating your financial statements, your 3 primary financial statements: income statement, balance sheet, statement of cash flows. So we talked about getting them comfortable with the numbers, what your revenue projections are going to be. The next question is they're going to be very interested in how are you going to use that the money, the investment that you're doing. We see so many out there right now, kind of spin-offs, not exactly in the marijuana industry, but those, like I said, the platforms that are creating around the industry. You know, you've seen recently anywhere from like 2.5 to 20 to 30 million being raised in this space. And whether it's a Series A funding, which is their initial round, or some are in their Series C as far as getting investment money in here. What they're all going to be interested in, again, in understanding your numbers, is how much of it is going to be necessary for just your startup or your organization costs. Then how much is going to be spent towards CapEx. So CapEx is your capital requirements, or said another way, it's your property, your plant, equipment, things that won't necessarily be recurring every year. That is your tangible, your leasehold improvements, your initial setup. Those are your capital expenditures, or CapEx. So how much is necessary towards that? And then the last big bucket, that you'll be talking to is working capital. What is my working capital? Your working capital is everything else. It's your people, it's your utilities, your monthly rent, if you're leasing. It's all of that that's necessary in order to start and continue the business. And it's looking at how you're going to be spending those funds, and then at what point is the business going to be self-sufficient? How are you utilizing that for growth? And as we always say, you need the money most before you start spending, and it's in that initial time period that you need to support it. So we've talked about the use of funds, we've talked about investors. Well, now what becomes very, very key with any startup, regardless of whether you went out and raised the funds or you invested yourself, or even got, you can't necessarily get traditional loans right now, but it's cash forecasting. And so a lot of times what we do is we create this 13-week cash forecasting template. So we're looking on a weekly basis. What are our expected incoming and outgoing? What are our controllable expenses? What are our non-controllable expenses? The controllable expenses, it's your marketing, subscriptions, those types of things. Your uncontrollable is your payroll, your rent, payments that are due back. And so it's putting in those buckets and watching it on a weekly basis so there aren't any surprises. If there is something coming, cash forecasting is going to give you that heads up, so you may be able to pull a few levers, you may be able to right size or have additional discussions. It's no fun having those discussions when you need to be having those discussions. So planning is key, and that's what the cash forecasting piece will do for you. So final thoughts. As we talked about, this industry is like no other that I've operated in, and I've been in lots of different industries, continue to be in lots of different industries, but it is such an exciting industry to be part of right now. With everything going on, with the speculation of when, if, things going away, things coming up, new players in the space, we're going to continue to see significant activity. We're going to continue to see changes. It's going to get, more friendly in the banking. Oh, I can't wait until the credit cards follow. Cash isn't necessarily what's going to monopolize your accounting and finance team, and you're going to continue to grow. Use platforms that are coming into the space to make life easier that is specifically being created for this space right now. Stop having the 280E conversations. Those are my least favorite to have. But to do and be part of the next round of what's coming in this space, I can't stress enough, it's to have a solid accounting and finance understanding, to be in compliance, to make sure that you can sleep at night, your accountants can sleep at night, your investors sleep at night, knowing that you've at least followed, you're filing, you're doing your stuff, and to be that, that entity that doesn't have any of that gray area surrounding it. To be part of what's coming next with the roll-ups in the industry or continuing to grow. It starts with making sure your accounting is solid and understanding that. So that would be my advice for entities, individuals coming into this space. It's so fun to be watching right now.